Today, I have a super amazing pleasure because, as much as my friends and I have been analyzing every aspect of Tesla that we can find to analyze, there has been this one big gap. We've talked about it. We've done some analysis. In fact, Brian Wong in the book, The Elon Musk Mission, did a pretty serious analysis of the future of the supercharging business, but nothing like Larry Goldberg has done. Larry, glad to have you on today to really give us some in-depth analysis.
Thank you, Randy. It's a pleasure to be here.
All right, this is Randy Kirk. If you like this kind of content, then hit the like button. And if you, in fact, you might want to wait till later and see if you like Larry, because then we could have him back. So then if you hit like, I'll say, oh, I need to have Larry back. Anyway, subscribe and hit notify, of course, for future interviews with so many of the great talent in the Tesla community. And then join Patreon. And Larry, you're on Twitter, so they should look for you on Twitter.
Yep. Tesla Larry.
Tesla Larry. Okay. And any other places they can find you?
Yeah, I'm on LinkedIn, but this is where I put, Twitter is where I put my Tesla content.
Okay, great. Well, Larry, what we want to do next is let's go ahead and share the screen.
Sure.
And let's go through your analysis of, okay, so let me set it up a little while you're sharing the screen. I have repeatedly called for Tesla to spin off the supercharger business, feeling that there just wasn't going to be enough profit in the business for it to be any more than a rounding error 5 years, 10 years into the future. So why keep it as part of the group when it would be worth way more if it was spun off as a separate company? So Larry has come up with a very in-depth analysis of the profit picture going forward. Hey, and it might make my analysis wrong. So Larry, go ahead. I'm going to let you start. I'll let you set it up from here.
Thanks, Randy. And I was of the same mind as you. I didn't see the supercharging business as being, that important from a financial point of view. I understood the strategic part of it very well, but I didn't understand that it was financially that impressive. And in fact, I was playing with the idea that you had. And then I went on a very long road trip last September. And boy, did the extent and the scope of the network really impact me. And I went to Austin in April to a Tesla meeting, and I again elected to drive because I had such fun in September. I love the road trip in the Tesla, in my Model X now, I really do. And just found it's so easy with the network. Well, we all know that, the strategic part of it is very clear from this slide. If you look at this slide here, this is Russ Mitchell. Now, we all know Russ Mitchell is no fan of either Elon or Tesla and has never had great words to say about it. But this is what he writes about the supercharging network. He says, he owns an electric car, a test drive an electric car, he's a big fan, but the public charging system, he says, not so much. And the public charging system, he kind of recounts his experience with taking his Ford Lightning EV from Berkeley down Interstate 5 to Long Beach. Now, I have to say, that's not exactly a massive road trip, but boy, did he suffer. So he says he's not a fan. He talks about the misery that he had, charging stations hard to find, maps that couldn't locate stations, paying for a charge card or a credit card often proved troublesome. And worst of all, most chargers were broken, and that's been, my observation, or otherwise out of order. Here he says, I must note that Tesla has built a vast network of fast and reliable chargers. I have to say, Randy, those are the only words of praise I have ever heard uttered from Russ Mitchell. I don't want to really make fun of the guy, but this kind of gives you an indication of the importance, the strategic importance of the supercharger network. And we all kind of know that, and we've all experienced it, particularly those of us that have road tripped in our Teslas. However, the big deal is not how strategically important it is. The big deal is that this is an incredibly profitable business.
So my first thinking when I was a neophyte in this area and saw these superchargers going up, and then way more of them going up, and then thousands of them going up, and then tens of thousands, was, oh my gosh, they're just like another Shell or Mobil in terms of their stations, and that there's the profit potential there is massive. And when you combine that with selling the cars, imagine a GM and a Mobil as one company. But my vision or my theory started changing in my head when I realized, well, to fill it up is only $25, not $75, and sometimes even less than that. So I started thinking, no, yes, it's a huge deal, but still maybe just a rounding error. But move on. Okay, this is
Randy. I just want to affirm what you said, because one of the things that escapes people, and I've seen it in some of the responses to my tweet, that not only is it much cheaper to fill up the car, but also very few people fill up their cars. It's not like there's going to be as many superchargers as there are going to be gas stations, because people use their home charging for 90% of their charging.
Right, exactly.
So you'd say that the network is only going to be 10% of the size of the gas stations. But let's look at the financials. I'm going to start by talking about, just the sheer capital efficiency of Tesla. It is mind-blowing. I mean, I've been around, I'm 77 years of age, been doing this for 50 plus years. I have never seen such capital efficiency in my life.
So Larry, you said you've been doing this for a very long time. Doing this, if I remember correctly, you are an angel investor. So you're analyzing companies and what their prospects are in high risk situations for a living. So did I get that right?
You are right. I started my life as an entrepreneur. As a very young man, I was an entrepreneur in South Africa, went on to do the same thing in the UK. And then from here, I arrived in the United States. From there, I arrived in the United States in 1983. And I've had 4 companies since I've been in the United States. All in all, I think I'm on my 8th or 9th. I was on my 8th or 9th company when I sold my company, I retired from the company I had sold the end of December last year. So I've got a lot of arrows in my back from businesses that I started, but I'm also an investor in probably a dozen companies, and I'm a limited partner in, maybe half a dozen funds. So I spend my days analyzing companies, everything from one-person startups to Warren Buffett's latest investment. So that's the gamut, and it's all self-taught, really. So when we talk about capital efficiency, I know a little bit about the subject.
Yes.
But I wanted to show you this slide, and it's in the deck from the Investor Day. And if you look at this slide, you just have to marvel. The gray bars are the investments that the charging companies have made. People like Electrify America and EasyGo, all these charge companies that are, nominally they are competitors of Tesla's, but they're the people that Russ Mitchell is having these harsh words about. But look at the capital that they invest. In New York, they spend $170,000 on each post in their network. Tesla spends $30,000.
Wow.
In California, Tesla spends a little bit over $100,000. Sorry, the competitor spends a little over $100,000. Tesla, about 40,000. In Australia, the difference is something like 70 down to 40, 50, 45,000. But I've done a very, very in-depth investigation into these numbers, because what I've done is I've looked at the actual financials of some of these companies. And I've done an estimate of the amount of capital Tesla has invested in their gigantic, tens of thousands of superchargers globally, compared it to Electrify America's 3,500 superchargers and EVgo's 850 superchargers. My estimate of capital is that Tesla has about 1.3 billion, actually that should be billion, 1.3 billion of investment. Electrify America has 2.45 billion of investment for less than 8% of Tesla's number of superchargers. And EVgo has 450 million of investment for their 850. So if you look at the capital spent to date, Tesla have spent a meager less than $30,000 a post. Electrify America is at $700,000 of capital. Now, some of that is accumulated losses, some of that is blah, blah, but I mean, it's capital.
Yes.
EV goes at 529,000 invested capital for their 850 posts. I mean, it's shocking. And I'm looking at about 100,000 incremental cost per supercharger post, and EVgo at about 100,000, and incremental cost for Tesla's 40,000. So,
what's interesting, Larry, is this is across the board. Tesla is so far ahead in terms of their cost of capital for their output in everything that they do, whether it's building a factory, whether it's building a line. I mean, they just prove it over and over again that their cost of capital, their capital allocation is unbelievably good compared to virtually any other company on the face of the earth.
I would call it capital efficiency.
Yes, exactly.
I think that capital efficiency, you're exactly right about, better than any other company on earth. I mean, I have never seen capital efficiency at this level in my life. I mean, Google had the opportunity to do that, because if you look at their business model, 95% of their profits come from, one thing.
Yes.
They spent huge amounts of money on these other things. It's not entirely, it's a very sort of simplistic statement, but anyway, let's go beyond Google. Let's go to any other company that has to manufacture stuff, make things. Nobody achieves the capital efficiency of Tesla. So I'll get off that bandwagon a little bit and talk about the growth of this business. I mean, it is stunning to see the number of stations and posts just continually multiply at this gigantic level of growth. And we all think, oh, it's a loss maker, but actually every post they put in the ground ends up making money very quickly. And that's what's amazing about it. So it is contributing very significantly, and I think it's going to contribute a heck of a lot more quickly. And a lot of it has to do with, well, there are really two things. One is capital efficiency, and that's the industrialization of this process of creating, building, and installing, which is, so Tesla. But the second thing is, of course, the number of cars they have on the road.
Sure.
We're about to see that grow faster due to the addition of other makes of cars getting to join the network. I'll talk about it.
And currently they're at 45,000, and I believe their projection for the end of 2024 is 100,000. So they're planning to almost double over the next 7 quarters.
Yeah, because they're getting to this industrial mode.
Yeah.
both here and in China. And, I haven't seen any announcement about a factory, a supercharger factory in Europe, but it has to come soon, sooner rather than later, because Europe is ahead of us in superchargers, quite dramatically ahead of us in superchargers. I've just spent a month in Europe, and I just see the proliferation of them at every stop on the highway. So not just of Tesla superchargers, but of various competitors. The competition there is strong. So,
of course, part of the issue in Europe is the standard, the European standard, yes. Which I guess was designed by a committee, according to Tim Farley the other day. He says, I guess he was talking about the U.S., the other format, the other type of charger in the U.S. was designed by a committee. Well, very similarly in Europe, it's been said there as well. But the European standard is required there, which Tesla then has to meet that standard, which includes elements in the actual unit that are unnecessary, that are wasted. Yeah.
Right. Yeah. And European committees are very much larger than American committees, I have to say. Yeah. So one of the factors of the supercharger network is just how good it's getting. And we saw this in the in the Investor Day presentation, where they showed the wait time is down, utilization is up. But there was an Easter egg in this particular slide, because one of the things they showed is the daily kilowatt hours per post.
Ha! I completely missed that.
Yep. That is a huge number, because it gave us the means to do the P&L.
Yep.
And so that's what actually started me down this rabbit hole. When I saw this number, and then I looked at the cost of electricity, and I looked at what they were charging for electricity, the light went on, and I realized, oh my God, this is a money spinner. Now, it may not have been in the past. They gave it away for free. And, I've backed into the numbers using these numbers, and I've said to myself, whatever they gave away is really marketing. Some people complain they don't advertise, they don't market. Actually, they do very well. And I don't want to get into that debate here, but I do want to say that there's no doubt at all, in my mind, none at all, that they're making real money with the supercharger network. So we can look at some numbers, actually. Now that we have that number, we can look at the notional revenue from the supercharger network based upon the number that we discovered. I'm going back to 2019, and I'm going forward as far as 2023 into the future prospectively. And I've gone to Wikipedia and looked at the historical number of supercharger stations, and I've looked at the average number of posts during that year. I've had to kind of back it into the year because, the posts get delivered during the period of the year. And I've taken the daily kilowatt hours per post based upon that slide. And I can translate that into gigawatt hours per year. And then I can figure out the revenue at the current charge rate of 36 cents per kilowatt hour. And this gives us millions of dollars. So we see that we started at about a $283 million business, and we're now a $1.3 billion business. Well, if the posts double by the end of 24, we're a $2.6 billion business. Now you can do the math.
Yep, indeed. Yeah, that's the amazing part.
And the margins are fantastic. Now, I haven't factored in, we get the power from the sun and we store the power in the battery and we deliver that. I haven't factored that in at all, because that's a whole nother calculation. The batteries are expensive. putting in, I don't want to get into that because that's a very simple calculation. That's an ROI calculation on the cost of power.
And again, I think you're right to make it a separate issue, but once they actually use solar and use the batteries, and now the batteries are also arbitraging in the local area, you have all kinds of possible revenues coming from the battery, but you also have you also have the capital expense, which has to be amortized over X number of years. But so it's a little hard maybe to get a handle on it, but it's another potential revenue stream coming out of the supercharger stations that isn't even included in the cost of goods compared to the cell.
Well, and there's so many factors to that, so we don't have to go down the rabbit hole, but I'll mention a few. The one is excess power from those solar panels can be used in the local area when it's excess after the battery's charged and there's time. So when you look at the margins though, and the margins are very simple, I look at what they're currently charging and what they're currently paying. I know what their daily throughput is. I take the margin, I apply it to the daily throughput, to the revenue that I get, and there's the gross margin. And the interesting thing about the gross margin is it's practically a net margin.
Yes.
So we're looking at the potential of $650 million contribution this year.
Yep.
And now you got to think about where that's going. And, for those, if you want to see how it's up and to the right, this just gives you a sense of it. So whereas we were both thinking this is kind of a must-have, a required-to-have business, just there to support the sale of cars, and, it's kind of marginal. Yeah, but look at where it's going, up and to the right. And the up and to the right is phenomenally, opportune.
Yes.
So, and that's really what got me going on this thing. One of the key factors in my thinking is, with every car on the road, it's incremental to the volume that's coming. So we're getting increased sales, but the increased sales are on top of an ever-growing fleet. So the miles driven are going up as well. Now, I haven't added to this numbers for Ford.
Right.
So when you start adding those numbers, you see we're at the beginning of really, something that's going to grow, explosively if our numbers, our shared numbers that we've all talked about for Tesla are correct. And then we have to understand that Tesla is only going to be a small percentage, whether it's 10 or 20, it's still a small percentage of all the electric cars on the road, or EVs on the road. And the EVs on the road are going to be all the cars on the road. I mean, I have the simple thesis that there's going to be a moment in time where people are just going to stop buying ICE vehicles. It's not going to be a gentle slope and a gentle rise, or even a meteoric rise. It's going to be like Blockbuster. One day they're there, and the next day they're going to be gone.
Yes, to a certain extent, I agree with you. I think there will be some kind of a residual that has to do with geography. Third world nations, second world nations won't be as quick, etc. But overall, I agree with you totally.
There are going to be specific use cases for which ICE cars are necessary or ICE vehicles are necessary. But that's not going to stop this sudden,
Right.
Be that as it may, Tesla is not going to be the only car in town.
Right.
And so, but these numbers are just following the Tesla slope. The true slope is going to be phenomenal. And if Tesla really focuses on that network, that supercharger network that they're building as a business opportunity of its own, the numbers are staggering. You know,
yeah, and you had earlier said 90% of the people charge at home right now, but as the numbers start to increase, that number is going to decrease because you're going to get into apartment building situations, you're going to get into big condos, you're going to get into people that don't have the capability to charge enough each night to be able to be fully charged and ready to go the next day. Maybe they don't have enough money to put into the electrification of that part of the home or that part of the condo. So there may be even higher incidence of supercharger charging.
Yes, and there's also a business case to be made for for Tesla to get into the apartment equipment business, just as they're in they're putting in all their charges into hotels. All they're earning right now are just the price of the charges. But when you start provisioning power to large scale, condos or large scale, townships, then it becomes a different game. And nobody beats Tesla at that kind of game.
Right.
So the opportunity there is very large indeed. So, what I'm talking about is an industry leader. They are already the largest network globally, not by a little, but by a long way. And this is going to be a huge global business. Their significantly lower cost of installation. I mean, their 50% is verified by an inspection of competitors' financials. In fact, it may be even better than they claim. The ease of use, I mean, it's legendary, but it's true. And, Russ Mitchell, eat your heart out. I mean, and then nobody can industrialize, and scale the way Tesla can. So, I'm not sure much more needs to be said. We have a business that has potentially, going to scale to a multi-billion-dollar business. My own reading of the numbers, are that we're going to see a contribution in and around the 60 cents to $3 mark per share.
Right.
Within the next 10 years, and it's going to be growing. So, it adds a very significant quantum to the value of Tesla.
So just for fun, in terms of your thinking, because of the work that you do, because you're an expert probably on a whole nother level than almost anybody watching this video, including me, even after you've done this and you've come up with this $3 a share potential within the next 5 years, it's still a rounding error.
I mean, $3
compared to, let's say, even just the sexy models plus the Cybertruck, I'm looking at that as a $400 billion business, not counting FSD, et cetera, that will be added, be hopefully added on, and robotaxis and whatnot, but a $400 billion business. Did you come up with anything close to 400 billion on the potential superchargers?
Well, I look at profit, not revenue.
Okay. All right. Oh, so let's take 30%.
$2 a share is worth, $100. It's worth $100 a share.
Right.
Right now, the share price is $200.
Right.
In and around.
Right.
That $100 a share hasn't even been considered. In other words, the $200 a share, I mean, if you discount it back to today's value and price, I don't know, $60 a share, $40 in and around. Let's call it $50 a share.
Yeah.
It means you buy Tesla for $150 a share. So yeah, you can talk about Optimus, you can talk about full self-driving, and those are all fantastic opportunities, but they're very, very, very hard to quantify because they're not a business yet.
Right.
FSD may already be a business, but I mean the
real business. Yes.
The real business. And some people say it's coming next month. Elon says this year, but he says every year it's this year.
Right.
My own call for it is closer to 3 years than 1 year. That's my measurement of it from my own experience of it. And, I'm a software guy, and so I know a little bit about the game, and certainly I know a lot about, the March of Nines because of the kinds of software that I've built. And there's a single rule about the March of Nines. It's always longer.
Yeah. I can certainly understand that. So let me just ask you though, in general.
Yeah.
So in general, let's say, you're old enough like me to remember General Electric and how General Electric was the conglomerate. Yeah. And then all of a sudden General Electric said, wait a minute, this conglomerate idea makes no sense because there's no way for the investing community to really be able to get a sense of all of these different value propositions within the corporation. So they started splitting them off, and that became, MBA material. You had to understand why that happened. At what point do you think, maybe you don't even have an opinion, but if you have an opinion, at what point do you think the insurance division or the energy storage division or the Supercharger division, at what point do you think it would make sense for the stockholders, not just for Tesla, but for the stockholders, to proactively split it off before the government does it? But let's leaving out the government for a minute. When do you think is a good time?
It's a great question, but you're compressing an era. General Electric became General Electric with multiple lines of business, not because they decided to go into multiple lines of business, right, but because that was a natural adjunct to their building of the markets that of all the markets they were in, because they were adjoining and they were supporting one another. And so if you look at the 90-year history, I'm guessing it's 90 years, I'm just going back to Edison, the first 65 years, it was thematic with what they did. They were doing it because they had to do it. They had to do it to support the core of the business.
Right.
That's where Tesla is today. They don't even know all the businesses they need to support the core of the business. They're inventing it as they go along.
Sure.
But they have identified some key components of a successful transition from ICE to electric. And General Motors is a very instructive...
I'm sorry, General Electric.
Yeah. General Electric is a very, very instructive case study for us. Now, it took them 65 years before it became, sensible to think about. And we were in the 80s before that. Maybe the late 60s to the early 80s was the opportune time to start moving these things out beyond the periphery, but to external companies. And certainly they kept the wine too long in the bottle. There's no doubt about that. But there was a high level of consistency and contiguity between those businesses for all that time. Now, I don't know how long Tesla maintains these multiple businesses under the single roof, but I will tell you this, that everything I've seen them doing up to this point is contiguous, consistent, and supportive of the mission. So, I think your thinking is right, but I think you're way too early by a decade or two. That's my thought. Now, when the crash of ICE comes, and when the detritus disappears and the new world emerges, we can start thinking along those lines. But I don't think we're even close to that yet.
Okay. Yeah, you and I, when we were talking before before we started the show, you were talking about you're a long-term trader. You like to think long-term, and being very close to your age, I I'm still a long-term trader too, but I do like to nibble around with some leaps and whatnot, and do some short-term trading from time to time. But the reality is, I can't be too long of a term trader at my age.
Right.
although most of it goes to the kids anyway, right? I mean, that's the reality.
Yeah.
But there are people out there that have different situations in their lives, which, yeah, okay, we could all say keep the price low so that I can, buy more. The opposite is there might be somebody that would like to cash out, and take their winnings. Do you agree with me that if you spun that off today, if you spun off the let's just call it the Supercharger division, if you spun that off today, the street would value it based on some of the information that you just provided, rather than just valuing it based on a rounding error at Tesla?
Yeah, I mean, it's possible. I mean, if we look at the valuation that they've placed on EVgo, it's not that great. In fact, EVgo came on the market as a SPAC, and it's like all SPACs, it's melted down. I think that, but the Tesla network would have a lot going for it. But I think it's the wrong time, because it is so deeply integrated into the mission.
Uh-huh.
That the day-to-day activities, almost the hourly activities of the folks involved in the network, and the folks involved in the app, and the folks involved in the supply chain, and the folks involved in manufacturing, are deeply engaged with one another. So to even think about spinning it off in order to get the street to value it is crazy. Look, there is a group of people who support Tesla, in the public conversation, that are all for maximizing the share price. I am not one of those people, because there are things that Tesla has to do now that are not necessarily consistent with a mission of keeping the stock price high.
Yep.
I'll talk about one thing, paying shareholders out with a share buyback.
Yeah.
I think that's very inconsistent with the mission, because having 20 billion in the bank in these uncertain times, but in this prospectively incredibly competitive environment, is semi-crazy.
Oh.
If I were an investment, a portfolio manager, I'd do the sums, and the sums would tell me, oh yeah, we want a $5 billion buyback. I'm not an investment manager. I'm as much an operator as I am an investor. And as an operator, I'm with Elon. I want that money in the bank. Only Elon knows, not only Elon, but Elon and his management know full well the challenges before them. This is a brutal business. The automobile business is a brutal business. Tesla's made it look easy, but it ain't easy.
It ain't easy.
And you don't give cash away. You just don't give cash away.
Yeah, and as I've mentioned on a couple of my previous videos, I've written a book on recessions, and I've studied recessions backward, forwards, and inside out. And the number one thing that you want going into a recession is tons of cash. I don't care what kind of recession. There's all different kinds of recessions. They're all based on different situations. But the one thing you want to make sure you have is lots and lots of cash in the bank.
The other characteristic of a recession is it's absolutely unpredictable what's going to happen in a recession.
Absolutely.
And, I did not live through the 29 crash all the way through 45. My father did. And all of his peers did. And, there's a whole generation who wouldn't spend a dime. Not a dime. I mean, they turn it over 3 times. And nobody today understands that way of thinking.
Yeah,
But Elon's father went bankrupt. For a strange reason, my brother actually worked for Elon's father.
Oh my gosh, that's funny.
Yes, we all come from South Africa, but Elon's father went bankrupt, and I think that Elon really understands the value of cash in the bank, much more so than portfolio managers who are, who deal with this as if it's simply an equation. Oh, that much cash, you should need that much revenue. That's not how people who are entrepreneurs, even when they have multi-billion or trillion-dollar companies, that's how they think.
Larry, this has been great. As I mentioned, this is something that we were dying to have, information we were dying to have when we were writing the book, The Elon Musk Mission. I'm so glad that you found that Easter egg and then took the time and trouble to do the rest of the analysis to prove the case that this is a significant business with significant profit potential. And we didn't even get into the potential for restaurants or gift shops or whatever else around these facilities. We didn't get into really what the numbers could be if every electric car on the road was charging at Tesla stations. So we haven't really touched on the full potential in this video, but we have looked at the base case, and even the base case is a very substantial number. And then, of course, you took the time to completely destroy my theory. Anyway, I'm not sure that I'm convinced, but I'm at least more convinced than I was before that keep it in the company, and I'll pick on something else to spin off. So, Larry, great to have you on board. Appreciate you.
Thanks for the opportunity, Randy. I appreciate it.
All right. So for those of you out there, hit the like if you like Larry. I mean, I can think of all kinds of reasons to have Larry back on. And then if you liked, and then subscribe and hit notify. And then, of course, the Patreon. And then follow Larry on Twitter. If you haven't already followed Larry on Twitter, what's holding you back? This is Randy Kirk, and it's been great talking to you.
Thank you, Randy. Take care. Bye.
Click the link below to get your paperback, Kindle, or audiobook now.